Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we will help you understand all the closing action of the stock markets, the day, how it panned out in trade as far as the benchmarks are concerned, the sectors and the stocks, and where we are seeing the top moves at this point in time. We'll also be joined by an expert who will help us understand what is the way forward for the markets and how should you be really approaching them. First up, let's look at how the markets are trading at this point in time, just about 25 minutes away from the closing today, and it's been second day of a running when we've seen muted trade to a lower day on the street. 60,345 the current level for the Sensex at this point. 300 points gone there. 58 points of a cut for the Nifty 52, 17,985. That's the level at which the Nifty is trading at. About 0.3-0.5% of a cut is what you've been able to see. Although there is a slight recovery from the lowest point of the day, but largely the markets are trending downwards. When you talk about the broader markets, including the mid and the small cap indices, let's look at how the action is shaping up there. In fact, in the morning trade, we were seeing a divided trend right there, and still it remains so. The small cap index down by absolutely flat with a negative bias, and the mid cap 100 index is up by about 0.5%. So there's been a sharp recovery in the mid caps today. That's perhaps helped the markets, climb up a little from the lowest point of the day. And the small caps are now flat, absolutely. Talk about the sectors right there. It's the Nifty Bank that's the biggest culprit, 0.8% of a cut there. And all the segments of the Nifty Bank, be it the financial services, the private sector and the public sector banks, all of them are trending down in trade. Especially with the financial services, that's where the pressure has been created today, over a percent cut for that one too. Apart from this, we also have some losses being seen on the IT sector, 0.6% down for that one too. But the rest of the sectors have actually picked up pace. They have helped the markets recover from the lowest point. Look at the pharma index, for example. That's up by about 1% So that's the one that's actually performing better than other indices. 1.5% uptick for the FMCG as well. So these two sectors from the defensive pack are leading from the front and perhaps leading to this recovery that we've been seeing in the markets towards the end of the session too. 0.5% uptick for the metals as well. The realty is also now in the green. And the auto space, that's the one that's driving from the front. 1% uptick for that one too in today's trade. So we'll look at how the gainers and the losers are also shaping up at this point in time. From the top gainers, you do have some two-wheeler majors like Bajaj Auto, Hero MotoCorp, driving in the faster lane, 1.5%, 1.7% up right here. Britannia, BPCL, NTPC, the other gainers at this point in time too. On the laggards, it's been the same story right from the word go today. Bajaj Twins, Bajaj Finance and Bajaj Finserv down in the red, about 5.5%, 7.5% of a cut is what you've been able to see. ICICI Bank, Power Grid and Apollo Hospitals, the other laggards at this point. Let's now welcome our guest for the day. Ruchit Jain joins in. He's the lead research analyst at 5paisa. Ruchit, welcome to Business Today TV and thank you so much for taking the time out. Well, the markets are shutting shop, albeit, off the lowest point of the day, but second day perhaps running into the red zone as well. How have you been able to see the way the trade panned out on the weekly expiry session today?
Yeah, hi, very good afternoon, Sakshi. Well, Sakshi, if you see recently, the markets have already seen a good correction from the 1st of December, where the market of Nifty had made an all-time high of around 18,880, after which the FIs started unwinding their long positions and they even formed some short positions of late, which has led to this price-wise correction. But after this price-wise correction of about 1,000 points from the high, I think the markets are now trading around the support level. If you look at the rising trendline support from the lower levels, it is coming around right now where we are, around 17,900. And even the momentum readings on the lower time frame charts have got into oversold zone after this recent corrective phase. So I think the downside seems to be very limited from here on, at least from a very short-term trading perspective. And because of that oversold setups today, even if you see that the market was down some time back, but the market breadth was not that negative, which it should have been during downtrends. Right, so I think the market is around its support, so a pullback move is expected in the near term. So it's better to take some contra trades over here, and we are advising to go long on the Nifty at current levels, keeping stop loss below 17,800 for a possibility of a pullback move towards 17,200, 250, which was the earlier resistance.
What about the banks and the Nifty Bank? What strategy are you recommending there? Today there's been a cut, although the Nifty Bank has been one of the better performers of 2022 when you compare it with the other major indices. Your thoughts here, and especially on the financial services top names, Bajaj Finance, Finserv, they've seen a sharp downward take. Any reasons for that you've been able to spot, and what do the charts suggest now?
So if we come to Bank Nifty first, then certainly last few months the Bank Nifty has taken the leadership and has been one of the outperformer, within the sectoral indices. But I think since it has got into that overbought zone, so in the short term we would see some time-wise correction or consolidation in the banking space. And I think leadership would be taken by some other heavyweights. Maybe Reliance Industries would come to the rescue. Other names such as Auto, which has been an underperformer of late, that could see some good bounce back in the short term. So banking we may see some stock specific action within the banking space. Stocks such as HDFC Bank or Axis Bank, which were relatively doing good, they may continue to outperform. But NBFC names such as Bajaj Twins is there, Cholamandalam is there. They all have been witnessing selling with higher volumes. And usually when we see sell off with higher volumes, those stocks tend to underperform compared to the broader markets. So I think that underperformance could continue. So rather than going for bottom fishing in those names which have corrected off it, it's better to stick with the outperforming names and try to do bottom fishing on corrections over there.
Right, absolutely. So, any strategy for Bajaj Finance that you would recommend and Bajaj Finserv?
I think no, for fresh buying, of course, should not be recommended, will not be recommended over here. But if any existing positions are there, then I would recommend to exit on any kind of pullback moves from Bajaj Twins. At least if one is looking from a trading perspective, although the longer term view is not that negative, but the short term, I think underperformance could continue. On the higher side, 6400, 65, 6350 would be the resistance zone where one can look to lighten up longs.
Right, okay. And the sector that's really outperformed today is the auto space. What is driving the auto sector higher? We did see that, the sector has been through a lot in the last 2 to 3 years. There's been a lot of headwinds, a lot of speed bumps that the sector has faced constantly. Even now, we do see that in this year again, the companies will be passing on the costs to consumers for a whole host of changes that we are expected on the policy front as well. And, the way the export sales have come through because of the slowdown, the way the sales have been on a month-on-month basis, any of the attractive names that look positive at this point in time?
So I think much of the negative news has mostly been factored in. If you look at last 2 months, the Nifty auto index was trading somewhere about around 13,500 at the start of November, and right now we are even below around 12,500. So I think that corrective phase has been done, and some stock specific buying has been witnessed. Even today, if you look at throughout the day, in spite of market correcting, some two-wheeler names such as Hero MotoCorp, Bajaj Auto, Ashok Leyland from the four-wheeler space, M&M is showing some signs of up move. So in the falling markets now they are witnessing some relative strength. So I think some up move could be seen in the near term. Hero MotoCorp within this space, I think two-wheeler space as a whole could show some good up move in next 1 or 2 weeks. So Hero MotoCorp within this space is technically looking quite strong. A falling trend line breakout has been seen today with relatively higher volumes. So one can go long on Hero MotoCorp around current levels with stop loss below 2,700 for potential target around 2,900.
Okay, understood that. And what about, the allied sectors like tire space? That's been buzzing quite a lot today. We did see some of the positive news flow when it comes to, crude oil prices, coming into a comfortable zone, and also rubber, how that has slipped to a 2-year low as well. Your thoughts on the tire space and how should investors approach this? I think Apollo tires and all these stocks were up at 52-week high today. Your thoughts on how to approach this space?
So clearly, because of falling input costs, the stocks have managed to hold on at higher levels. And most of the stocks from the tire space, whether it's Balkrishna Industries, MRF, C8, Apollo Tires today, have witnessed a good price volume action. So this uptrend is likely to continue until we see any spikes in the rubber prices or crude oil prices again. I think that buying interest would continue in these names. So Apollo Tires within this space is one of the strongest name where we can see some good price volume action. The moves have been supported by good volumes. Even if you look at the derivative segment, decent open interest build up has been seen, which indicates long formations in the derivative segment as well. So I think Apollo tires stands out within this basket. But overall, yes, the view for this entire sector, all the stocks, most of the stocks within the sector is quite positive.
Okay. The other pocket that is actually up today is the FMCG space. And we have seen like Britannia among the top gainers. We've also seen some updates for some of the other companies like Marico has given a Q3 update when the management has said that the rural demand recovery was not as dissembled and also muted revenue growth due to the elevated retail inflation right there. Stabilizing input costs will be aiding the operating and gross margins going forward. And basis that, we have seen some brokerage house reports where CLSA has given an underperform rating on Marico, 550 rupees as a target. Nomura has given a 590 rupees as a target. Your thoughts on Marico and any of the other stocks that you've been tracking quite actively in the FMCG space, and you believe that, in 2023 that stock could actually perform better?
So I think the follow-up move has to be there. Until we see follow-up move just from a 1 day or 2 days up move, one should not take a bold call in these names, because the entire FMCG space have been going through more of a time-wise correction since last 4 to 5 months. And no, just because I think markets have corrected, many traders tend to find some stocks which are defensive in nature, and that's why we see in between pullback moves. So very few names within the FMCG basket are looking good, from a positional perspective. One of them which stands out is certainly ITC, where we have seen good returns in the stock in the year 2022. Last 3 or 4 months, we have seen some time-wise correction, which just seems to be a corrective phase within an uptrend. And once this time-wise correction is over, I think the stock should resume its uptrend quite soon. So, bearing ITC or Britannia to an extent where no, the structure is good, I don't think that one should deeply dive into FMCG names from a short to medium term perspective. As I think relatively some other sectors are likely to give much better returns.
Okay, and how is the metal space shaping up, technically speaking, on the charts? How does it look? We were it's about a year back when we were talking about this metal super cycle really coming about. None of that really shaped up. We did see the rally fizzling out quite soon. Now there is talk that, China is reopening the economy after those lockdowns, etc. These things are stabilizing right there. What really happens to the metal names?
So I think a couple of things that drives momentum in the metal stocks. One is China's reopening, which is much expected on the cards now. And second is dollar index. The metal stocks and the metals and the metal stocks are quite inversely correlated to the US dollar index. And of late, we have seen that the US or dollar index have corrected sharply from the highs, where it formed a high somewhere around 114, 116, and right now it's trading around that 104, which is quite comfortable. So when the dollar index is going down, usually metals are react positively to that, and until we see a spike or an uptrend again, resumption of uptrend again in the dollar index, I think metals would continue to do well in the short term. So stock specific names, especially some of the mid cap names which are giving very high dividends, such as National Aluminium or SAIL within the PSU basket, could do well in the short term. And from the large cap space, stocks such as JSW Steel, Tata Steel are likely to drive the momentum.
Okay. Any two sectors that you believe that can actually turn out to be dark horses in 2023, and investors should definitely keep them on their radar?
So one of them I think would be sugar space. No, we have seen that last few months a lot of positive news have been hovering around this, around the ethanol story, ethanol blending story. So I think that outperformance is likely to continue in this year as well. We have seen that after some price-wise correction in stocks such as Balrampur Chini, the at lower levels clearly we can witness some good buying interest from from investors. So sugar would be one sector where I think the momentum would continue, and one can relatively see some good outperformance in the coming year as well. And apart from that, specific names from the pharma names, I think can see some bounce back, because they have seen a good underperformance since last couple of years. We have not seen any major returns from many of the pharma names, and no, the price-wise corrections have already been done. So downside seems to be very limited from here on. So some of the pharma names, I think, could show a good bounce back from current levels.
Right. Since you talked about pharma, I want to talk about the IT space as well, because that sector has underperformed quite hugely in 2022. Beginning next week, we are going to be seeing the earnings flow starting with the top majors, TCS, Infosys, HCL Tech, Wipro coming out with their numbers. Although this entire year we have seen a subdued performance, and that's largely due to the slowdown in economies in US and Europe, which are larger clients for these companies that are outsourcing over there all their services. But 2023, do you believe that, after such a sharp correction, is there any stock that you believe technically looks very strong, and perhaps the earnings can also support, and then they could continue to recover?
So I think a couple of factors would guide the momentum in next few months. One is the results which would come out. Secondly is the US markets, how that pans out. Because if you look at last 2 months when the recovery has been seen in the US markets as well, the recovery has been mainly led in the Dow Jones Industrial and S&P 500. So financials and industrials have done well in the US as well, but IT has not performed significantly. Even right now, if you look at the Nasdaq index, it is quite close to their October lows, in spite of a good up move of late in the broader markets over there. So until we see a broad-based recovery in the Nasdaq, I think somewhere relative underperformance would be seen in many of the IT names over here also. Yes, in case if we see Nasdaq getting bottoming out and some moves over there, then I think our IT basket also would start seeing some good buying interest. So as of now, I think one should go very slow on picking up IT names very selectively and keep a close watch on the Nasdaq index, what happens over there. And if I have to pick any names over here, then I think it would be specific names such as Infosys, TCS, and Persistent. These are the three names which technically looks quite firm, where downside seems to be very limited. So if one has to start buying from the IT names, then Infosys, TCS, and Persistent should be on the radar.
Okay, Ruchit, in the end, if you could suggest 2 or 3 top bets of 2023 as per you, any stocks that you believe can actually give, sharper returns and create alpha for the investors, whether or not the overall benchmark indices really give you that kind of returns.
I think one should have a mix of some high beta names as well as some defensive names. I'll start with defensives first, where NTPC I think looks quite good. We have seen some good up move in last 1.5 year, and I think the stock has again started witnessing good buying interest, where up moves have been supported by good volume. So NTPC would be my first pick, where one can buy at current levels, for a decent 20 to 25% upside in the near term. Apart from that, from the two-wheeler space, I think Bajaj Auto could be one dark horse, where we have not seen any kind of price up moves recently. But I think the stock is trading around its long-term support, so the downside seems to be quite limited from here on. So in case of in terms of risk-reward ratio, I think it's quite favorable to take some contra buy trade in Bajaj Finance, Bajaj Auto at current level. So Bajaj Auto and NTPC would be the two names where I think we should see some good returns in this year.
Okay, understood that. Well, thank you so much, Ruchit, for being with us on this show and discussing these several sectors and stock picks for 2023 as well. Here's hoping that the new year really turns out very profitable and healthy one for you and to your team members and everybody in your home as well. Thank you so much for being with us. Let's quickly look at how the markets are looking like at this point in time. Of course, there is a recovery from the lowest point of the day. The Sensex is down only 250 odd points. 60,400 now is what you can see. 18,000 back on the Nifty at this point. 43 points of a down tick is what you can see, but definitely there's been a considerable recovery from the lowest point of the day. Last 10 minutes remaining, we'll just see whether there has been a sharper recovery, and there will be a sharper recovery from here on as well. So do stay tuned with us on Business Today TV to catch all the current updates and following updates on markets and from the world of business. And don't forget to subscribe to this channel. Also stay in touch with us and continuously engage with us on our other social media platforms as well: Facebook, Twitter, LinkedIn, Instagram, everywhere where you can catch up some more interesting news and videos from the digital space as well. Many thanks for joining us on this edition.